So I shot this video, and this is the second attempt at it. And this is more of the, well, I guess, straightforward video version of the video I created this morning, where I was drinking my coffee and doing all this other fun stuff in the morning. And I was watching it, and I was like, not really excited about it. So here's what here's the point of that video that you probably will never see. I like a company called Franklin Square KKR Capital Corp. FSK is the symbol. Why do I like this? I like debt. I like people owing me when it comes to debt. And this company is a BDC, business development company. And basically how it was formed was way back when Franklin Square partnered with Blackstone GMO and put a bunch of money together and went out and started lending it to companies, and like in the software industry and and development kind of companies and stuff like that. What I love about it is they securitize the debt by taking a senior secured debt position, and that could be a lien 1 or lien 2 kind of position, and this represents roughly over 70% of the overall lended assets. Now, if I remember off the top of my head, I think there's 180 companies they have lent to, and it's pretty darn solid. Is it, the next biotech company is going to solve Alzheimer's, or is it the next company that's going to take your Limp Biscuit and make it a Wonder Bread thing, if you know what I mean? No, it's not. It's debt. They loan money, and in return, they get paid back a higher yield than, say, if you maybe borrowed at a bank or some other corporation. The cool thing about this stuff is it's floating rate. And with the environment we're in right now, where the Federal Reserve is talking about raising interest rates like 4 times, and the market's like pricing in like 5 or 6 times this year, when rates rise, these guys get paid more on the debt, on the loans they have made. Does that make sense? When interest rates rise, like floating rate rises, they get paid back more on the debt they've issued to or lent to these companies. If they don't pay it back or they file bankruptcy, they are the first guys who are to get paid. Okay, so let's talk about debt structure and bankruptcy. The first guy out of the gate who gets paid with a bankruptcy is the senior secured debt people. So to give you an example, Goldman Sachs was a senior secured debt group or company who lent $5 billion to General Motors, and when the financial crisis happened and they filed Chapter 11, they held the keys to all the factories. So they got paid. They got paid. No matter what, they were not giving up the keys to the factory. And they basically just said to the government, hey, if you want to help reorganize this company, and so that thousands of people don't get fired and laid off, and you have an real bad unemployment situation, you're going to stroke us a check for our $5 billion plus maybe a little bit more. And guess what happened? It did, because they held the keys to the factories. So that is a first lien securitized debt situation. It's what you want, right? If you lend money to a buddy and it's like, say, $10,000, you want some collateral. And that may be his $10,000 lawnmower or his boat or his Lamborghini, which would be a real big win if you lent $10,000 and got a Lamborghini for it. Hell of a return on your money. The point to this all is this. Franklin Square lends out money. They go to companies, they do their due diligence, they dig into the nitty-gritty, the balance sheets, the profit loss. They look at all this stuff before they hand money over. They then take a first lien position, or first or second lien position in most cases, and that's over 71% of the overall portfolio. Symbol is FSK, by the way. And by doing so, they basically securitize and have collateral to back them up if things all go awry. The other thing I love about this is, as we enter this recession, and yes, I did say it, we are in the beginnings of a recession. You're going to see it in second quarter retail numbers, especially on the lower end, not so much on the higher end goods, but retail numbers are already looking at mathematically that we will see a recession or be in a deep recession second quarter into third quarter. And the Fed probably will come out probably third quarter and say, hey, we started into a recession in January 2022. So you heard it here, probably second or third if you subscribe to one of these other channels that I subscribe to, who these guys are dead on. Anyways, that said, FSK right now, why I love it even more so, is that it pays you while you sit and wait. And that is called a dividend. And as we enter this recessionary environment, you will see more higher paying dividend type of stocks or bond type positions that pay a coupon are going to become very popular. That's why treasuries do well. That's why high grade corporate debt does well. And that's why dividend paying stocks do better in a recessionary environment. So this all really just makes an enormous amount of sense. Excuse me. So the other side of this is I've known about Franklin Square since probably 2001 when I was introduced to it via private placements. This is a company that is dead on about their due diligence, about doing the right thing and doing the work. When I was a financial advisor, this was just something that we introduced to clients' portfolios who were accredited investors, and they were able to clip a coupon, and no matter what, they collected a check. Well, now it's public as of 2013. FSK is now out there, and of course it went down in March of 2020 like everything else. But since mid-2021, this thing has stayed above its 90-day EMA line, which is a thing I follow. If you look back on a weekly basis, which is what I look at stocks first and foremost, and it's over its 90-day and it's holding there. And when we're having this volatility in the marketplace, it's holding its ground. Most importantly, why I love this thing is because it pays 11% annual dividend. $2.48 a share on an annual basis. Why wouldn't you own it? Why wouldn't you have something like this in your portfolio? It just, to me, makes sense. And yeah, you can buy the hottest biotech that may solve some sort of disease or Alzheimer's or whatever. But you know what? It's speculative. And when you're in a downtrending market like we are, look at the S&P, look at the NASDAQ, the Dow, and you look at treasuries starting to move high, yields are moving down, and values are moving higher. This is where you want security and safety. So check out Franklin Square, KKR, Capital Corp. Symbol is FSK. I love it. I love getting paid while I sleep, while I do nothing. I like passive income. This is something to consider. All right. Have a great day. Peace. Live loud.